Mortgage rates are down substantially from where they started in 2025, with a 30-year fix now around 6.5%. Our next guest says that could translate into big savings for millions of homeowners who locked into 7 or 8% mortgages. Vishal Garg is the founder and CEO of Better.com. The first AI-powered mortgage lender. Shares of the company are up more than 700% this year. He joins us now on set. We've got a high bar in terms of letting CEOs on the show tonight, just stock performance. Vishal, great to have you with us.
Thank you so much.
I have to ask you, because I'm sure that intro, everybody's saying, well, what can I do? I want to save. So what is it in terms of, if you're in a 7 or 8% mortgage right now, what can you do to unlock savings?
If you've got a 7.5% mortgage, then that's 20 million Americans have over a 7% mortgage that they've gotten over the past 3 years. The best thing you can do is look for a refinance. The average mortgage rate's around 6.5%. We're at 6.2 on Better.com, and that 80 basis points, $400,000 loan balance, you can save $3,200 a year in interest, and that's pretty decent money in inflationary times, and where times are tough and we're going into a recession.
Yeah. In terms of how your business works, I mean, I'm assuming that some of these, a 6.2% rate versus a 6.25%, refinance rate, that difference is partly because of the money that you are able to save because you're using AI.
That's right. The average mortgage company, it costs them about $12,000 to make a mortgage. It costs Better.com $3,000 to make a mortgage. Our AI loan officer, Betsy, is able to automate so many of the tasks. You can
Betsy's not a person, by the way. Okay, I'm just making clear to the audience. It sounds like he's talking about somebody,
not to be sure.
In the next office.
Man, as far as he's concerned.
But anyway, sorry to interrupt.
I would tell you that Betsy's better than 80% of the loan officers that you've seen out there. She's trained on 12 million phone calls. She knows all the underwriting criteria across all the investors. She can calculate savings for you. She can figure out what's a better option for you. She can ask you all these questions that people otherwise don't have time for. And she's open for business 24/7, 365.
Vishal, congratulations, number one. Number two, people want to say, well, what's a comp? Figure IPO. Talk about how you stack up against them.
Well, I think Figure's a great company. They're focused on the home equity space, and the average American family can save a lot of money by taking all the debts that they have and refinancing them using a home equity line of credit. Americans are sitting on $32 trillion of tappable home equity. They've got $18 trillion of debts, half of which they've put on since the pandemic. And so we're seeing an average family save $1,100 a month by refinancing through home equity. Figure was the leader in the space. They started in 2018. We launched our home equity product in 2023. We're only about 18 months in, but our direct-to-consumer home equity product is already 2/3 the size of Figure. And we're now catching up fast. They're about 5.5 times bigger than we are, but they trade at something like $8-9 billion valuation. And so our valuation's just around $1 billion. So if you think about it from that perspective, we're growing faster than they are. They've done a great job of establishing that there's a there in the market and reintroducing the home equity product. But we're growing much, much faster than they are.
So, Vishal, then how about the competitive landscape? And you say you're AI-driven, but it just seems to me that the adoption rate in AI is such, and I would think there are a lot of industries where absolutely AI will be change the playing field in terms of the efficiencies of those businesses. Why aren't other people popping up in your space doing the same thing? Well, and they are, but how are you leading them?
That's a really great question. The average mortgage company works off of 8 different systems. They have a CRM system, a point-of-sale system, a system for the loan officers, a system for the processors, a system for the underwriters. We built a system called Tin Man from the ground up. It's the first new end-to-end system in the mortgage industry in 25 years. The incumbent solution that's got 90% market share, you can't even have more than one person working in the file at any time. You might probably remember from your Windows 95 SharePoint days where you had to call somebody up and say, hey, can you get out of the file so I can get back in there? That's how the bulk of the mortgage industry works today. And so when you take a look at that, we've got the only end-to-end system, which we then have been able to train the AI on, being able to do any task inside the system. For other mortgage companies, they've got to get rid of the entire core system, retain their entire workforces to be able to implement AI. So what are they doing? They're making an AI appointment scheduler. They're making an AI document retriever. But that's not real AI. Real AI is when you can take massive amounts of costs out of the system and deliver that back in savings to the consumer.